you can't really compare it to the spot ETF of gold, because gold is an inflationary asset, and you can't compare it to ETFs on real estate or on bonds or on equity. You really have to say, this is the first time we ever plugged Wall Street into an asset that you cannot produce any more of. And so nobody knows what will happen, except that if you reason from first principles, you know that it's got to actually perform better than all the other asset ETFs because the underlying fundamentals are just better. Let me lay out 3 possible ways to invest in Bitcoin. One is you buy Bitcoin, the underlying asset. The second is you buy the spot ETF. The third is you buy MicroStrategy. Okay, so we talked about the headaches of buying Bitcoin, the underlying asset. You have to do it on a crypto exchange and put in place parallel custody, compliance, compensation, control systems. So that's the challenge of that. The closest thing, the most compelling idea for a plain vanilla Bitcoin investment of an institutional investor is you buy the spot ETF. You're getting the 1-to-1 correlation, for $1 million you put in, you're getting $1 million of Bitcoin. What's the positive? It's marginable, it's good collateral. I can buy in a second, no money down. And I don't have to build parallel custody, control, compensation systems. So all of my problems are handled by Wall Street. What's the cost? 50 to 100 basis points a year. Okay, so if I charge you 1% a year over the course of 20 years or over the course of your lifetime, it means that I take 20% of the money you invested at 1%. So there's a cost. 50 basis points means I get 10% of your money, approximately. So, but having said it all, I would pay you 50 to 100 basis points in order to be plugged into Wall Street. And it's not a problem. It's a lot better than the alternative, which is to rebuild all their systems and then finance themselves. So MicroStrategy is not that. MicroStrategy you could think of as a levered long Bitcoin company that pays you a yield. Okay, so I'm not going to call us an ETF, but because we're not a financial company, but we have $4.4 billion plus of Bitcoin and $2 billion plus of debt. So what we've done is we've levered the balance sheet with debt that costs us about 1.5% interest. Wow. So MicroStrategy takes advantage of its position as an operating company to do something that an ETF can't do. An ETF can't issue junk bonds. An ETF can't issue convertible bonds. An ETF can't do like an ATM like we could do, and an ETF can't buy Bitcoin with cash flows. So we have a lot of flexibility as an operating company, and we don't charge that fee. So we have $4.5 billion of Bitcoin, but we don't charge $45 million a year.
Big news in the crypto world. Elon Musk recently spilled the beans on NFTs during a chat with Joe Rogan. He exposed a major flaw in the NFT system. They're not as secure as they seem. They're basically just URLs to images, which means they rely on external servers, and that's risky business. Musk's fix: let's put those images right on the blockchain, making them bulletproof. Enter Bitcoin Ordinals, the NFT superheroes. They're born in the Bitcoin ecosystem, and they're here to save the day. Digital assets are etched directly onto the blockchain, thanks to developer Casey Rodarmer. Big names in crypto are loving it, with over 38 million inscriptions and counting. This move towards on-chain storage is becoming a trend, showing the importance of keeping digital assets safe. But hold on, Ethereum still rules the NFT world with 84% of all trading volumes. However, Bitcoin is the new kid on the block, especially for high-value NFTs, thanks to its solid security. Bitcoin's price is on a wild ride. It recently shot up to nearly $36,000, and there are some interesting reasons behind it. The U.S. Federal Reserve's decision to hit pause on interest rate hikes is one of the big factors. When the Fed raises interest rates, it's often bad news for risk-on assets like cryptocurrencies. But there's more to it. MicroStrategy, the crypto-loving corporation, just bought another 155 BTC, bringing their total holdings to over $5.5 billion. Big moves in the crypto market, with a $1.35 trillion market cap, are adding to the excitement. Plus, there's a buzz about potential regulatory changes, like a Ripple lawsuit win or a BlackRock BTC ETF approval that could drive crypto to new heights. Ready for more financial excitement? Mohammed A. El-Erian, Allianz's chief economic advisor, thinks Bitcoin is the new flight to safety. He's suggesting that Bitcoin is replacing the U.S. Treasury as the go-to safe haven. Global turmoil and rising Treasury yields are making people doubt government bonds. El-Erian drops 2 truth bombs. The U.S. Treasury isn't as safe as we thought, and Bitcoin is emerging as a safe asset because people are losing faith in government bonds due to interest rate risks. So make him have it, folks. A crypto roller coaster with Elon Musk's groundbreaking NFT revelations and Bitcoin stealing the spotlight as the new flight to safety. Fasten your seatbelts. We're in for an exciting financial journey. Let's continue our discussion with Michael Saylor.
What if I created an investment vehicle that paid you a yield instead of charging you a fee? And what if I was able to borrow money at 1.5% interest? I borrowed $1 billion at 0% interest and bought Bitcoin with it.
Insane.
So if you were if you were pro Bitcoin, let me give you a theoretical. If you get a 2% yield instead of paying a 1% fee, it's 60% difference over the lifetime of your asset. So, right. So if you have $1 billion invested and you're getting a 2% yield, right, you're actually picking up $20 million a year, right, instead of paying $10 million a year. So the dynamic of the company is very important. So you can imagine that if I don't charge you a fee, and if I have cheap leverage, then the benefit accrues to the common stock shareholders, right? Because I went and I borrowed $2.2 billion at 1.5% interest, and I bought Bitcoin with it. So what's the logical theoretical yield of Bitcoin? Is it more than 1.5% a year?
Well, I really
Let's say
hope
it was.
I really hope so.
If it was 15% a year, then we're scraping 14% positive real yield off of the debt. And so that would be 14% of $1 billion dollars or more, actually 14% of $2.2 billion. So that would be $300 million a year that accrues to the benefit of the common stock shareholders. And every quarter, we can choose what to do. So some quarters we would issue junk bonds, other quarters we would issue convertible bonds, other quarters we would sell the equity. Other quarters, we would just use our own cash. So the answer is there's always going to be a good market and there's always going to be a bad market, right? There are things you shouldn't do and there are things you should do. So MicroStrategy, to make a long story short, is a bit more complicated than a spot ETF, right? If you want something plain vanilla and simple, that it should basically correlate 1-to-1 with Bitcoin after you pay the fee, then you buy a spot ETF. But if you wanted to actually try to outperform Bitcoin, like MicroStrategy's outperformed Bitcoin, our performance over the course of the 3 years is higher than Bitcoin performance. So if you want to outperform Bitcoin or outperform the spot ETF, you would do that by accretive financings. Like, for example, if our stock trades at a 30% premium to the underlying assets, and we sell $1 billion of equity, we actually capture $300 million of accretion to our shareholders, you see.
If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.